Let's discuss about the impact of foreign exchange in the property, plant, and equipment. Think about a business. The parent company is there in India and have its operations throughout the globe. And suppose we are talking about a specific subsidiary, it's in the US. The subsidiary is in the US. Now, as per the requirement of IFRS 10, the entity is required to prepare consolidated financial statement in accordance with IFRS 10, and they need to consolidate this subsidiary into these Indian operations. The subsidiary prepares its financial statement in US dollars, whereas in India, the financial statements are prepared in Indian rupee. Now, what parent company or the subsidiary will do, they will translate all the transactions or all the financial statement from US dollars to INR. So they will translate. At what rates? The rates are basically specified under IAS 21 that deals with foreign currencies. IAS 21 specifies some rates that they need to apply. Now, just for your information, IAS 1 says for all the assets, we need to use the closing spot rate. We need to use the closing rate for conversion. Now, suppose under year 2017, the total property, plant, and equipment in the books of a US subsidiary was $100,000 when the conversion rate was rupees 60 per dollar. Rupees 60 plus rupees 60 per dollar was the conversion rate, and $100,000 is the balance as of 2017. So when they will convert this figure, convert the year-end figure to the Indian rupee, the conversion rate they will use is rupees 60. So the amount will come in the books of in the books of So the amount that will come in the books of Indian firm or Indian parent company would be 6 million rupees, because we converted the US dollars into the Indian rupee. Now, during the year, the entity did not purchase any asset. It may happen that the foreign subsidiary did not purchase any asset. On 2018, the balance still remained $100,000. I'm talking about the cost of the asset. I'm not talking about the net book value. I'm talking about the cost of the asset. However, the exchange rate moved from 60 to 70 rupees per dollar. Then in such a case, the conversion would be at 70 per dollar, and the book value of the cost of the asset will become 7 million rupees. Now, due to the exchange differences only, the value became from 6 to 7 million. Hence, this is the impact that requires separate presentation in the financial statement. Separate presentation in the financial statement. Hence, you can see that in the notes when they prepare financial statements, or in respect to the notes related to PP&E, the first thing comes up is the 1st Jan 2018 balance. Suppose it's 6 million in INR. We add during the additions during the year. We already mentioned that there is no additions. Disposals during the year, there were no disposals. Exchange difference in our case is $100,000. It came up to $700,000, 1,000 rupees. So it's in INR. So this is the impact of foreign exchange in respect of property, plant, and equipment. What happens is due to the translation process, we use the different same same rate but at different exchange rates. So what will happen is due to which we may face some differences, and that difference is termed at exchange difference.